Hello and welcome to December 1st Reverse Mortgage Calculator. There is a whole bunch of stuff to go through. But first of all, my name is Jason Eichmiller. I run this channel, Reverse Mortgage Reality and Key Home Lending. We're reverse mortgage experts. We've been doing this since 2008. Before we get into the whole, into all this information, and there's some big stuff that I'm going to share with you. If you haven't subscribed and if you want to continuously be updated on not just the interest rates, not just how much money you can get, but what's going on behind the scenes in the reverse mortgage industry and what we think is going to happen in the future, then go ahead and hit that subscribe button and enable your notifications. It should be somewhere towards the bottom there. All right, so let's get into it real quick. I'm going to share my screen and let me see here. Boom. All right, so go to the top of this. Yesterday, if you guys pay attention to the markets, if you don't pay attention in the markets, it's okay. My big picture with this is on a bit high enough level as interest rates go up and as there's fear in the market, the loan sizes go down. And as interest rates go down, then the reverse mortgage loan sizes go up. It's as simple as that. So what did we find yesterday? I think Jerome Powell went on and he had a speech saying that the Fed's actually they're seeing some progress, so they're going to lower their interest rate hikes. The Fed is meeting later on this month. I think in a couple of weeks, they're going to hike it up, but instead of being 3/4 of a point, as it used to be, it's now just going to be a 1/2 point. That's what we think. And so the market responded and they're lowering rates, which means that as of yesterday, the reverse mortgage loan amounts that you can get have increased, which is a pretty cool thing. Let's look at another. Let's look at this. This is the year. This is the 1-year Treasury where we kind of go off of all this stuff with. But if you look at it historically, and I've done this before, if we do year to date, we see that it's consistently climbed. So from March, it was about 1.04%, and now it's up in the 4.7. So we had a little dip, and then before it peaked out at about 4.8% or so. So again, big picture is as these rates go up, you're able to qualify for less. And as these rates go, they drop a little bit, you're able to qualify for a little bit more. If you want, by the way, real quick, if you do want to get in touch with me, if you have any questions about how reversal works specifically for you, you see my information, my contact information is streaming at the bottom of this screen. You've got my phone number, 888-309-9705, email address, and the website, reversequotes.com. I'll just share the website real quick. This is reversequotes.com. If you want to schedule a time to chat, you can just throw your information in here on the right. And if you want to see what other clients, other seniors think about reverse mortgages, then you can just take a look at the testimonials. We've got a lot of this. Actually, Maureen, she's an attorney. She was actually a client's daughter. So this is good if you're an adult child and you're looking to see, well, what do other adult children feel about? How do they feel about reverses? Go look at Maureen's interview, and got a bunch of other videos and testimonials and things. So now we're going to do is we're going to look at the calculator. Let's see. The rest of this stuff was just a preface. Okay, what's going on with rates, and how should the calculator behave? Now let's take a look at how the calculator is actually going to behave. And I'll try to pretty this up real quick and turn this slideshow. Let's see here. There we go. We got it. All right. So this is the thumbnail. The HECM versus the proprietary. What's better to take? And it's funny, even though the HECM's doing a little bit better, there's pockets where the proprietary reverse mortgage is actually improving. So we'll take a look at all this stuff. So first off, how have we changed over time? The last one of these I did was 2 weeks ago because we didn't have too much movement in the market. And I had a big line of credit video that I put out last week. So if you want, what I'll do is I'll actually link to the line of credit video. The line of credit is the most powerful, in my humble opinion, the most powerful way that you can take a reverse mortgage. So if you want to check that out, I'll have it linked below. But what we can see is if we compare what you can get from a HECM, which is the government reverse, to a proprietary from November 17th, which is about 2 weeks ago, to today, you see that the HECM's actually, for a 72-year-old with a $400,000 home value, the HECM's giving about $11,000 more. And the proprietary is giving a little more also, but just about $5,000 more. And here's what's interesting. The HECM is actually beating the proprietary. Now, at the very end of this video, I'm going to go over kind of some examples on where you should take the HECM and where you should take the proprietary, because these are just tools, and some circumstances say that you should do one thing, so some say you should take the HECM, some say you should take the proprietary. So we'll go over that. But onwards and upwards, let's blast through this real quick. This is the 55-year-old reverse mortgage calculator. And if you've been with me for a while, or if you know the basics about reverses, you do understand that at 55, you can't get a HECM. You have to be 62 to get a HECM. So that's why that has an NA. For as far as the proprietary's dropped a little bit across the board for an age 55-year-old. We're seeing the biggest drop off are at the lower home values. So say home value 400 and 700. There's some daylight. It's giving drastically less money. But once you get to the $1 million and $2 million, right here over on the right, it's dropped a little bit, but it's pretty close. So again, the proprietary is dropping. It's consistently dropped, at least for younger borrowers, but it takes a pretty big hit from you at a $400,000 and $700,000 value. But once you're above that, then the proprietary is working out okay. As far as age 62, all right, here's what's changed. And I alluded to it earlier in this thing over time, the fact that the HECM is giving more money than the proprietary at a lot of ages and home values. Check this out. With the HECM, you're able to get drastically more money this week. Say $700,000 value, you're able to get $216 as opposed to $195. $1 million value, $302 instead of $275. And you know that $2 million is going to be the same thing, because the maximum home value with the HECM, or the maximum home value that they give you credit for, is $970,800. So the proprietary has still dropped a little bit for 62-year-olds, which means that if you need if you need a credit line, you're always going to do a HECM. But if you're 62, you're going to look at a HECM before you look at a proprietary. And again, that's changed. That was different last week, the week before, and over the past couple months, the proprietary was giving more cash. What about 72-year-olds? All right, so the HECM is still giving more cash for a 72-year-old. But then look at this. As you get a little older, the proprietary is picking up. So as I told you, there's little pockets here. And I don't know why these pockets exist. I'm just kind of reporting the news here. But as you get older, the proprietary is giving you more money than it did a couple weeks ago, and the HECM is giving more money than it did a couple weeks ago. At lower values, say up until probably about $800,000 or $900,000, the HECM is winning, giving you more cash. But once you go up to $1 million, $2 million, obviously $2 million, again, the proprietary will always win. But the $1 million, well, if you look at it, 364 versus 360, not a big difference there. So then you look at the characteristics. What do I need this loan for? And which is going to help me get what I need better? Is it the proprietary or is it the HECM? Age 82, we can see that the HECM is still winning at the lower home values. The proprietary is winning a little bit at the higher home values, and everything is returning higher loan sizes than they did a couple of weeks ago, which is pretty cool. We go to age 92. Again, these are, I don't do a ton of these for 90-year-olds. The oldest person I ever did this for was 103. But most of the folks I do these for in the 90s or early hundreds, you're looking for, you want to stay in your home, but you need a little help. So these are normally for home health care. So you can see actually at age 92, the HECM now is winning across the board. And look at this, it's winning drastically. Even $1 million value, the HECM is giving almost $91,000 more than the proprietary. So it's drastic. The HECM likes older folks. That's basically what it is. But everywhere except for, well, the proprietary is actually returning a tiny bit less here besides the 700. And once you get to 2 million, the proprietary is returning a little bit more than it did a couple weeks ago. So again, there's pockets. And what you should understand is this, especially in this market where things are changing on a weekly basis. What you've got to do is you really, really want to compare and contrast the two. So whatever your age is, whatever your home value is, if you called me, then we would go over, first of all, we'll deep dive into your situation and your needs. And we'll look at, hey, what do you need to get out of this? What does this need to do for you? So in some cases, it is a proprietary. Some cases, it is a HECM. Sometimes even if a HECM return less, you'd still do the HECM. Sometimes if a proprietary return less, you'd still do a proprietary. So let's look at the reasons why you would do a HECM versus why you would do a proprietary. First of all, the HECM, and again, if you haven't seen the credit line video from last week, take a look at it. We dive deep. We're very, very granular about the credit line. The credit line growth is a special feature to the reverse mortgage that no other vehicle, no other financial tool has. Basically, you get a line of credit, you don't have to take from it. It never ends, unlike home equity lines of credit, and it grows tax-free over the years. So that's only available with a HECM, though. You can't get it with a, well, you can get a line of credit with a proprietary, but it's not as good. It only lasts for 10 years, only grows for 7 years at 1.5%. I'm going through this quickly, but if you want to, if you want to deep dive again, well, obviously you can reach out to me with questions, or you can just watch that credit line video. Monthly income, the HECM is the only program that really does it. If you don't need all the cash up front, if you just want a little bit of cash, or you want to keep some money in a line of credit, again, the HECM works. And as far as retirement safety net, the proprietary can work too, because it'll give you the cash, or it'll give you a line of credit for 10 years. But I'm not in love with 10-year lines of credit, because what if you need it for 11 years? Well, then your money's gone. So when I'm looking at the most powerful retirement safety net possible, I'm looking at a HECM. Let's take a look at reason. I hope this makes sense, by the way. And I'm just kind of skimming the surface. There are other reasons to get a HECM. So if you have those questions, you can ask below, or you can give me a call, schedule a time to talk. Yeah. Now let's take a look at the proprietary. Now this gets nichey. This gets into the rules of the HECM. But if you've taken a cash out loan within the last year, they actually aren't going to let you get a HECM. So if you've taken a cash out loan within a year and you still need to do a reverse, got to go proprietary, which is fine. The proprietary gives you all your cash up front. What happens with the HECM is, let's say you're free and clear and you have a loan size of, say, $300,000. You're only able to get 60% of that right away with a HECM. So if you need all the cash up front, I just use home health care as a reason, because home health care gets really expensive. Other reasons too, of course, but funding a business, maybe if you have something smart to invest in, if you need to take out a lump sum for your kids, helping them buy a house. So there are other reasons besides home health care to get all the money up front. But so the HECM, again, the government reverse, only gives you 60% of the money that you can get up front. Versus the proprietary, they just give you the money. They don't. They say, hey, you qualify for 300. Here's a check for 300, or they'll wire it at your bank account. Either one. So as you can see, there's pluses and minuses for each of these. So what you want to do, again, I might be beating the dead horse now, but what you want to do is you want to go back and you want to, if you speak with me or you speak with somebody else, hopefully it's me, because I'll do my best to help. But whoever you speak with who is a reverse mortgage expert, tell them what you need this for. Tell them, the more that we know about your situation, the better we can recommend a solution. It's like a doctor. You go to the doctor's going to ask you lots and lots of questions about, what hurts, diving deep, what hurts. And they're going to do tests. They might do a blood test. They might do an x-ray. They might do an MRI. Reminds me, I got to get an MRI on my knee. Not very fun. But the doctor is going to really go super, super deep, just so that, and the deeper that the doctor goes, the stronger his prescription is going to be. So I hope that probably does make sense, because you have been to the doctor and you probably do realize that, hey, I got to tell him everything so that he can give the best recommendation that he can. And we're no different. Never say that I'm a doctor at anything. Organic chemistry in college was very hard for me. But as far as this goes, the more I know, the better I can diagnose and the better I can find a solution for you. Or maybe we know that maybe we'll find out that there isn't a solution. That's very possible too. It's possible that you don't qualify for a reverse. It's possible that a reverse can't help you. So if that's the case, again, the more that I know, the more I can diagnose this on the first call. Because if you can't qualify for a reverse mortgage, then I want to let you know as soon as possible, so you don't have hope in getting something that you can't get. Hope that makes sense. All right, so if you want to get in touch, this is me. My name is Jason. Run this channel, run Key Home Lending and Reverse Mortgage Reality. There's my phone number. It's still streaming across the screen, hopefully, 888-309-9705. You reach me at Jason@Key Home Lending, or you can go to the website, reversequotes.com. I appreciate you. And again, this is really good news for the HECM. I think what we've seen is there's some hope in the markets. The HECM is getting a little bit bigger. Hopefully as weeks go by, I'll be back next week. We'll do the same thing. We'll kind of see where it's at. But hopefully this helps. And hey, I wish you the very best. If you need to reach me, you know how to. And take care of yourself.